Okay, so this sum is about only journal entries. We are not going to prepare any account. They are asking about journal entries. Okay, if you see in the requirement, Disha Mohit, I'll read the sum for you. Disha Mohit and Nandan are partners. They decided to dissolve their firm, pass necessary journal entries for the following after various assets other than cash and bank and third party liability have been transferred to relation account. Okay, that doesn't matter. They're asking for journal entries for the following adjustments. Okay, so one by one we'll do. So while doing the journal entry, we need to keep the relation account in your mind. Okay, and in the working note, I'll just make one relation account here in a rough. Okay, an old typewriter which was not recorded in the books was sold for 2,000, whereas the expected value was 5,000. Okay, it doesn't matter what is the expected value. How much we sold it for? We sold it for 2,000. And when we are selling any assets, we are going to record on the credit side of the relation account because it's a receipt, right? Credit side. What we used to write over here? Buy bank, because the name is not given, correct? So what is the rule of the ledger to journal or journal to ledger? It's opposite side always. What I credited, this is debit side and this is credit side, correct? What I credited over here will get debited in the journal. So bank I credited over here will get debited in the journal. So entry will be what? Bank account debit to a realization account. Amount is 2,000. Doesn't matter what is the expected price. How much we sold it for? 2,000. Okay, so we are going to record that 2,000. First thing is done. Second, stock of 70,000 was taken over by Disha at a discount of 30%. At a discount of 30%. So when Disha is taking over stock, again assets taking over, we record on the credit side what we used to write here by Disha's capital, correct? So Disha is credited over here, so we are debit. Disha's capital account debit to realization. 70,000 minus 30%. 70,000 minus 30% is how much? 49,000. After subtracting 30%, the cost comes to 49,000. So she took it for 49,000. Okay, this is also done. Now see, total creditors of the firm was 20,000. A creditors of 2,000 was untraceable and other creditors accepted the payment allowing 10% discount. Out of 20,000, 2,000 is not traceable. Now how much is left to pay? 18,000. And that 18,000 accepting payment allowing 10% discount. So we made a payment 18,000 minus 10%. So when we make a payment, where we are going to record in the relation account? Debit side. What we used to write? To bank. Correct? So bank is debited over here this time. So we'll go on the credit side of the journal entry. Entry will be what then? A realization account debit to bank. 18,000 minus 10%. 16,200. I'll repeat one more time. 20,000 was the creditors balance. Out of that, 2,000 are not traceable. So 18,000 was the left to pay, and they allow us a 10% discount. That's why 16,200. Correct? C adjustment is done. Mohit paid relation expense of rupees 18,000 out of his private fund, who was to get a remuneration of 13,000 for completing a dissolution process and was responsible to bear all relation expenses. Responsible to bear means what firm is saying will pay you 13,000 your remuneration, and what are the expense of dissolution or relation coming, you have to bear from your own pocket. So first of all, we'll show the entry when we are paying a remuneration to him. How much remuneration we are paying to him? 13,000, right? 13,000 remuneration we are paying to Mohit. So when we pay, we'll add on the debit side. To whom we pay? Mohit. So I'll write here Mohit's capital account. The entry will be what? Relation account debit to Mohit. because Mohit was debited in the ledger, so it will credit in the journal. 13,000. Okay. Now, what about this 18,000 which he paid from his private fund? It doesn't matter to the business now because the firm said we'll pay you 13. Rest, whatever the expenses are coming, you need to take care of that. So he paid it from his private fund. So it's nothing to do with the firm. So no journality required for 18,000. I hope it is clear. E part. Nandan had taken a loan. Nandan had taken a loan 50,000 from the firm. The firm gave a loan to him, which was paid fully by him to the firm. So this is loan of a partner asset side. You remember asset side partners loan where we used to record capital account debit side, right? And what will the journal entry for that? This is Nandan's capital account debit to Nandan's loan account. 50,000. Okay, sit down. Rupees 12,000 was recovered from the debtors which was written off bad debts last year. Doesn't matter, we got the money. When we got the money, we record as a receipt. No name is given, so what will I buy back? So bank accredited, so your debit. Bank account debit to realization. 12,000. That's it. This is direct journal entry, right? I hope you understood all of you. Direct journal entries.